and thank you everyone for joining. High Income Architect, I see you.
All right, I have started the recording so everybody knows. If you'd like to come up on the stage to say hello, or you have something to share with the audience, I'm happy to do so. Just let us know. But we'll get started here in a moment when folks. So I see Howard here, so I'm going to go ahead and invite him up. Okay, Howard, you've been invited up to speak. I think you can just select. There we go. And I'm looking for Dom to get started with him. Oh, there I see him. All right, so we're going to go ahead and get started. Dom, I've also invited you up to speak, so you should be on the stage and able to mute and unmute yourself. So we're going to get started today. We'll start with a disclaimer. This is a discussion for educational purposes only and is not financial advice. Nothing shared here is a recommendation to buy or sell any securities. All investing involves risk, and you are responsible for your own decisions. Please do your own research or consult with a licensed professional before acting on anything discussed here today. With that, let me jump right in. We are joined today by Howard Chan, founder and CEO of KURV Investment Management. Howard has 20 plus years in investment management and previously has worked at Goldman Sachs Asset Management and at PIMCO, where he led PIMCO's European ETF business. Howard also is a graduate of MIT. We're also joined by Dominique Tersin. I hope I said that correctly. He's the portfolio manager in KURV, and Dom has 25 plus years in investment management and previously served as a portfolio manager at PIMCO with working spans on short and low duration portfolios, firm-wide enhanced liquidity management, and European ETF trading operations. He's been with KURV since 2024. I want to officially welcome Dom and Howard to the stage. How are you gentlemen doing?
We're doing great. And I just noticed the title of this call is with Howard Chan. I think Dom should probably be the focus, have the spotlight, since many of you guys have heard me speak before. Thank you for inviting us to this. And it's the new year, the first one we're doing with you guys the new year. So hopefully we can be helpful and let you guys know what we're thinking and what we're doing in our strategies.
Welcome, Howard and Dom.
Dom, if you'd like to say hello, this is my first chance to talk with you. I am honored and humbled that you would join us. Thank you.
Dom, are you there?
Dom, down at the bottom of the middle part of the screen should be a microphone that you can click on and click off that would allow you to be heard. All right, well, while we're waiting for Dom to figure that out and get that or get some questions done, then I want to go ahead and just get started. And I'll just start with Howard, and then as Dom can participate, please jump in. We'd love to hear from you as it's our first time. Basically, last time we spoke in December, you kind of had a meh attitude toward 2026 in the markets. I just wanted to ask if for an overview of how you're seeing it now. Has that changed, or are you still feeling the same way?
Yeah, our outlook for 2026 still remains pretty true. We still think there's some weakness in the labor market, and today we obviously had a job market. But what we focused on was actually quite a reversion downwards from the previous year. So we think, at least for the moment, the job market is still at least tepid in our opinion. We always anticipated that potentially the first quarter would do actually quite well. And the reason why is because last year, the tax bill that was passed, it allowed for a few things that we think would be tremendously positive to the economy. One is that obviously there were a lot of tax cuts that were in the bill, and individuals will probably get more refunds this year, but really largely on the corporate side, they're going to get a lot of tax refund back. So we think that will induce more spending. But there's also a provision that was passed in the last bill that allowed you to depreciate certain costs and expenses, and it's only for a limited period of time, which we think combined that with the tax cuts would induce actually a lot of spending from corporations. So we think those are pretty positive, at least for the first quarter, maybe going into the middle of the second quarter. Once that fades, then we think that the reassessments of the labor market would probably come into focus, and there might be we'll have to see how the job market or a lot of the labor data comes in through the first 5 month-ish of this year. There could be a weakness, but we think even if there was a weakness, it's probably going to be a bit shallow, and then by the end of the year, we'll probably would be doing fine. And then the last part, which is that inflation continues to be well maintained, at least for the moment. So that isn't as big of a concern as we had in the last couple of years.
And what's your take on the choice or the nomination for the Fed? Do you think that is a true shakeup as the markets kind of took it, or is that kind of a nothing burger and it's all going to work itself out?
Yeah, Dom and I actually when the nomination came out, it made some waves, and the next day we saw gold and silver sell off quite a bit. And Dom and I actually recorded an episode of KURV Your Enthusiasm, which is our podcast, which we never released, where we talked a lot about this. And I don't know, Dom, can you does your speaker work?
There was a report through the crowd. Joey stated that he saw a muted mic for Dom.
Okay. So I'll keep talking until Dom jumps in. So for us, we didn't think it was that big of a deal than what the market had I guess reacted to, largely for a few different factors, which is that it is true in the past, Warsh have talked about tightening the Fed's balance sheet, but he's also been one that has been the most vocal about lowering rates sooner in this particular cycle. So, on and off, that's pretty balanced. And also, Warsh is, even if he's the chair, he's only one of a few member of the FOMC that actually makes the rate decisions. And the composition of that committee hasn't really changed that much. Obviously, we had a couple of new replacements from the new administration that is pretty dovish and wants quite a bit of rate cuts in the committee, but a lot of the compositions of the committee remains the same. So we didn't think on balance it was going to change that much in terms of what the Fed decided, and they always will caution, it's based upon data from the market. And so I think for us, it seemed like an overreaction from the market.
Yeah, I did not understand the entirety of the large move in the market when that happened. I think I echo what you feel in there. And when Dom is up and ready, just jump in there. We'd love to hear from you. It's our first time, so I'm excited about that. While we're talking about that, then kind of give me your overview right now with gold and silver, how it's working. Was silver really just a crunch from what was going on globally? Was it a meme trade? How do you see gold and silver playing out for the rest of 2026?
Yeah, I think maybe I should give you guys a bit of a framework of how we're thinking about, and Dom, just jump in and interrupt me whenever you. And this is something actually Dom and I and investment committee talk a lot about, which is where is the world going? Right? Certainly, in the last 12 months, we've seen a much different, or in the direction of a different configuration of how the world works. We're moving from a globalized world to a more deglobalized world. You know, developed countries continue to issue a lot of debt, which hurts fiat currencies in general. And then we also see that we have this tremendous amount of infrastructure built out that the world is trying to do, right? So how do all these themes intersect to make sense of what has been happening? So for us, gold and silver exposure was always a long-term investment thesis that plays out, I think, over the 3 to 5 year time frame. And largely that, and I've mentioned this before, and that still remains true, is that for the most of developed country, they continue to issue more debt. So it's almost impossible for most developed countries to really grow out of this debt. Which means, they can't raise revenue, they can't decrease expenses, right? It's both very unpopular. So really the only way to get out of the debt cycle is through inflation. And this isn't just a US problem. We've talked about it. Dom is French. The French after COVID is almost in a debt spiral. Germany issuing more and more debt to build out defense. And we just saw that in a new Japanese election, Japanese people want a government that wants to have very strong fiscal policy to induce growth, which means they're going to issue even more JGBs, Japanese government bonds. So people who want to protect their assets or in fiat currencies will continue to look to assets that are going to protect the value. It doesn't really, there's no other really fiat currencies to go to. The other transition, the multipolar world is China. Chinese renminbi is not convertible. Even if you want the Chinese renminbi, you can't really get it. The euros is really only used within Europe. So the natural, and I would say, Bitcoin has been proven to be a bit not, at least for the moment, not a great hedge against fiat appreciation. So really the only alternative is to have gold, and then from there, the diversification from gold into silver. And just to frame it, because I think oftentimes media goes in extreme, right? We think the dollar is still going to be a predominant asset in most people's portfolio because that is the global reserve currency. And again, renminbi and euro is just not really good alternative. If you go from 0 to 5% allocation to gold to 10 to 15%, that's actually a huge move and provides a lot of price support for gold and silver. Okay. And then additionally, I think it's worth kind of considering, which is that if we're going into a deglobalized world, that means that people cannot rely on their trade partners for input products, which means that they need to secure their own source of security, whether that is from a defense perspective or from a natural resources perspective or from an energy perspective. So that's why we think, and this is how we have constructed our platform based upon this view that over time, you're going to have more competition for natural resources. You're going to have energy security issues. And on top of that, we have already seen essentially China have weaponized, the export of rare earth materials, right? And then at the end of 2025, they put export controls on silver. So all of these is part of that theme of just people are looking out for themselves. They need to make sure they have what they need to build their economy. So anyways, I'll stop there. And so that's kind of the undercurrent for a lot of these.
Are you currently still bullish on both silver and gold in 2026, or are you seeing that we might have a sideways here in 2026?
No, I mean, I think I'm still very bullish. Gold will continue, and then I would say, right, the run in silver towards the end of 2025 is a little bit unhealthy. Like an asset that goes up that much will have to come down at some point. But you actually saw in the third quarter the same price action in gold, where people were like pretty shocked that gold was at $4,000 an ounce. Then it went to $45,000 an ounce, and then it collapsed back below, and then now it's right up there in that level, right? So we're gonna see these little spikes, but I think the overall trend still is going upwards because for gold, people want price protection, and for silver, we actually have huge demand and actually decreasing supply. Where it's actually, for those who are know a little bit about silver, it's actually extremely hard to mine pure silver. Silver is usually a byproduct of mining copper or zinc. So we're undermined about like 100 million ounces a year, roughly. That's been like the report. But with technical factors, is that if we're going to build out this AI infrastructure, they need alternative energies in the form of solar panels. Solar panel uses a lot of silver. There's also been export controls on silver, and the fact is, and this is where I think for us, it's sort of a guiding principle, where we talked about this. When you invest, what you want to do is pick the right highway. I guess on the East Coast would be, well, West Coast would be freeway, and on the East Coast would be highway, and then just over time change the lanes, but at least in the general direction of where things are going. And so for us, like silver will still continue to have price support because a lot of the bars from the vaults are moving out, and there's not supply to replace them. So when you have a scarce resource, that ought to be very supportive for price for that asset.
All right, I just wanted to double check with Dom. Are you there? Are you able to unmute yourself?
Yes, can you hear me now?
I can hear you wonderfully.
Right.
How are you, my friend?
I'm very good, and sorry about the late part.
No problem. It was probably something on my end, so I do apologize.
No, it's my end.
Sincerely. What time is it over there where you are at in France?
It's okay. It's almost 11.
All right. Well,
that's all right.
Then we'll honor your time and the evening time there. But we did want to give you a chance to just kind of introduce yourself. I gave a brief introduction, but if there's anything you'd like to share with our audience or folks for future reference,
Ambassador.
Yes.
We are having a little bit of a robotic feedback on the mic.
On mine or on Dom's?
Cutting in and out.
I'm really sorry.
Can you hear me?
I don't know what to do. I'm hearing Howard really well.
Very, very, very choppy. I'm getting about one every 5 words.
Okay. I'm really sorry. I don't know if there's something I can do right here.
I can hear everything fine, just so you know.
It sounds fine on our end.
Yep.
Okay, thank you.
Wonderful. I'm glad about that. So Dom, please share anything that you'd like, and then I want to get back to 2 more broader questions and then drill down specifically into some of your funds. Dom, the floor is yours.
Yeah, sure. Thank you. No, I think you were just about on gold and silver. Just some perspective if you build a portfolio on that. As Howard said, silver has been choppy. Well, gold as well, to be honest, but not to the extent as silver. And in general, if you build a portfolio, silver is at least twice as volatile as gold. So be conscious of that when you allocate your funds. We still think both will go up. Personally, I'm a bit more biased on silver because the point of pain in the industry is not there yet. So there will still be demand. And the demand will start to slow from probably $130 per ounce from there. And it takes time for the demand to switch into copper. So that takes ages to 1 to 3 years for the industry to switch. So there's still some good way for this asset.
Awesome. Thank you for that. We've heard your 130 pain point on silver, and I've made a note, not financial advice, of course, but I appreciate that. One last kind of overarching question for either of you. What are your feelings about the behavior, the price action of Bitcoin over this last period of time? Maybe also going all the way back to 1010 when we had that one-day crash. And once we get through that, we'll go ahead and move on to your funds.
Okay, I'll start. So I think for us, right now, we don't have, we've decreased our exposures to a lot of crypto-related assets, but that's from a standpoint of we typically look at how much risk we are taking to generate or expected the returns to generate from a particular asset. And obviously, Bitcoin has been the volatility of Bitcoin has always been high, but extremely high recently. And we can't see from a risk-adjusted standpoint, there are other better risk-adjusted assets to put in the portfolio than crypto exposures right now. But obviously, we've seen different cycles in Bitcoin, so it could have a huge recovery, at some future point. So I think we rather right now be a bit more conditional on the asset class than to have right out exposure into Bitcoin.
Makes perfect sense. Dom, did you want to add anything to that, your viewpoint or your outlook for Bitcoin?
Bitcoin on the event of the last year, like the stock crash, and I think we've seen that this year as well. Well, I guess it's part of the cryptocurrency world. I think to have this type of crash, probably because of leverage, which in a way silver was part of it last month. And when it comes down, it's pretty hard. So yeah, you have to take that into account.
Of course. And Dom, could you, for our listening audience, those people that haven't met you yet, kind of explain what your role inside KURV is?
For sure. So I'm the portfolio manager at KURV. I was portfolio manager at PIMCO a while ago. I was doing the ETFs for PIMCO in Europe, the capital point person, capital market point person for the ETFs, and also managing the cash for the European cash portion of PIMCO. At KURV, I'm the portfolio manager of the funds, so I do allocate and do the risk measures of the portfolio for all the funds at KURV.
So you're the gentleman or the main engine behind the trades, the selection of strike prices, the durations, and even the equities?
Yeah, on more the technical side, yes. After there's a discussion with YieldMax, on macro strategy, like more long term. But yeah, on strike decision, on payoff profile, that will be me.
Are there more than you and Howard on the team, or is it a team of 2 experts?
Yeah, so the way that we make decisions is by committee, and so the way that the characteristics is that Dom and I tend to be good complements of each other. I'm generally the person who's saying take more risk, and then Dom will pull me back and say, what if this happens? And he's the more looking for down. I look for basically upside, and he looks for downside protection. So the combination of the two is has been working out pretty well. The way that we look at it is that we start with, and this is part of our DNA from PIMCO, is we look at kind of a macro first. Where are things in generally going? And then we look at sort of microstructure bottom up and see if there's any dislocations in the market within that particular, like I said, highway that we pick to go. And then we decide what the risk exposures that we want to do. And Dom is the person who actually implements and figure out, because there's many different ways in which, I'll give you an example. This might be of interest. So let's say there's a particular name that we want to underweight, right? There's actually many different ways in which we can underweight. We can sell some exposure to have less of that exposure. We can write a cover call to decrease the delta exposure of that position. We could buy a put to also decrease the risk exposure of that position. But not all of these are equal. If you have to sell something, there's a transaction cost to be considered. If you, if you sell a call, you get a premium. If you buy a put, you're using premium. The vol and on the call and the put may be skewed, so the implementation may be very different. So Dom is the person who is like figuring out all the technical implementation on to implement the views that we have kind of decided by committee.
That's great. It's good to kind of understand how it's going underneath the hood, so to speak. When we spoke in December, you had a specific strategy of how you constructed KYLD. You dropped the fund on October 31st. We had a little rough run with the markets at that point. So my question now is, have you changed that strategy on construction, or are you sticking with it? And for those that might not have been aware of it, would you explain it to our audience?
Yeah, so the high income strategy is the most volatile and looks to invest in a basket of high growth securities and assets, and then at the same time finding in the bucket of high growth assets that have probably some of the higher implied volatility, so then we can harvest income from those particular names. We started with 5 themes, the AI infrastructure, the kind of Web3 crypto exposures, network. We had a hedge, so in terms of precious metals. And the last one was government supported industries. Most of the themes have been pretty consistent. We've just been adjusting exposures throughout that time. The one theme that we have adjusted massively, which I just mentioned, is that we've decreased our Web3 crypto exposure for now. I think also maybe people have been asking this question, and I do want to address it, is that in the latest distribution, we actually decreased distribution for that particular strategy. And I'll kind of explain a little bit of why, and Dom, jump in. So in the last month and a half, we've seen a shift in the market. Market has been there's a few different things that's been happening in the market, which is one, there has been a rotation out of growth into, I wouldn't say necessary value, but I would say traditionally tried and true industries. So those are so you can see if you're a dividend investor, you often can see a lot of the tech income funds, and then the traditional like things like SCSD, right? SCHD has been outperforming, but that one has what we call the traditional older sector exposures like financials and utilities, which have been outperforming tech. So there's been sort of this sector rotation that's been happening in the market. And when the market falls, it is not just, say, equity is falling. We've seen fixed income also sell off at the same time, which tells us that there is I wouldn't say necessarily de-risking of the market, but certainly risk is being pulled back from the market. So, in an abundance of caution, as we go into this sort of, we think is a little bit of an awkward risk regime, we decreased distribution as a precautionary measure to make sure that we're very focused on making sure the NAV is at a certain level, and we don't want it to fall more than a certain amount, or else it's very hard to kind of have it recover. And so we're just cautious of the environment that we're in. The different themes have been working well in different environments and doing poorly in others. So for example, our precious metals have been a pretty good negatively correlated asset in the portfolio that has generally been pretty positive, but with the sell-off, say at the last day of January, that has been a negative to total performance, but since then it has climbed back up. Obviously, the reason why we decrease some of the crypto exposure is that whether we're in a, I don't know, crypto Siberian winter or something like that, the risk return profile is not as good as some of the other asset classes that we have in the strategy, and the others have generally been sideways or slightly up. So we pick these names because we want to be able to hold them for at least a year or two. So we don't think there's any solvency issues with the names that we have in the portfolio. But we have sort of technical kind of risk. I would call it maybe risk leaving the market a little bit. So we just want to be kind of cautious navigating the current environment. Dom, do you have any other things to add?
No, yeah, I think the target is to get back to around $25 on the yield.
As you'd explained to me back in December when we talked about it, you said that you were going to collect premium and target the amount of return that you were doing, which was around that 16 cents, and that you felt the fund could handle that, and that whatever was over it, you wouldn't distribute, you'd kind of bank some of it. Am I hearing and understanding that there possibly wasn't enough bank to make the 16 cents, or it was a precautionary to make sure that you were protecting the NAV currently for future distributions?
Yeah, so we have clipped implied vol for the names that is still in the portfolio are still very high. So we're clipping plenty of coupons or premium in the basket. I think maybe if you think about two components, so there's the price component and the income component. We are still writing calls, sometimes at the money for certain names to get the premium. You're right. Instead of distributing all of it, we want to keep it back a little bit so that this is sort of a math thing. Like if your fund drops 50%, that's an extreme case. You need to actually generate 200% to climb back to where you are. So we don't want to risk the fact that so a lot of the NAV falling is not because we're not paying enough premium. It's because the underlying assets, the price have gone down, right? But if you believe that they are good assets and over time they will recover in price, that NAV should recover to where, hopefully at a place where you would recover the capital, right? So that's independent of the income that you're generating. So that's the portion where we want to be cautious so that we're able in a position to be able to have when risk is back on, then we'll be able to generate the price appreciation to have the NAV appreciate.
Okay, not to press the point harder, but just so that I understand, you had indicated that you really felt that the fund, the risk that you were taking, the way that you were viewing it would be able to substantiate the 16 cents or that percentage yield. What changed that made this distribution be about 40% of what you had anticipated?
Go ahead. Or you, Dom, were you going to say something?
No.
Okay. All right. So we dropped the yield because there are some premiums that we can hold back to just stabilize the NAV and have lower volatility in the basically the NAV calculation. We keep it in the fund. We could always distribute it later, but I think for now, we don't want the NAV to go down. And you can see sort of the level where we made the decision was sort of the $20 level. It's just that right now, if you want to recover from say 20 to back to 25, that's like a 25%. Just without income, that's a sort of a 25% increase in price, right? And that's doable with a high growth portfolio, right? But we just want to make sure that we, the further the NAV goes down, the higher the return needs to be generated to go back to that 25% level. So we thought that we want to just be cautious and then hold back some of the premium so that quite frankly, the hurdle is not as high to go back to 25.
Yeah,
Does that make sense?
It makes sense. The idea that the fund has had a little bit of a decline in share price, that 12% now to get back equals 25, and if you're distributing on top of that, you're looking at 50. It makes complete sense, and there are many out here's investors appreciate your attention to the NAV and ensuring that the capital that was infused into your funds isn't eroding at an irregular rate. So I think that people are appreciative of that. I just wanted to make sure we drilled down and understood the strategy and the decision behind it. Is that all right?
Yeah, and again, I want to just clear, like, we're not targeting a specific yield, right? We want to maintain as consistent as possible, but to the extent for us, like, NAV stability is even more important. So that's why we made that choice to lower the distribution so that the NAV would be more stable.
Great, that helps a lot. Okay, I'm going to move on to some community questions here because I want to honor your time, the lateness for Dom, but I do want to make sure that I got to the community questions. Is that all right if we move on to those?
Yeah, it's you guys' time.
Wonderful. Okay. The first question we had here is that somebody would like some understanding on the recent KYLD holding changes. Just a general perspective would be great. I know you touched on a little bit of it, but for example, it looks like some of the strategies have changed a little bit. Some of the holdings have changed. You discussed moving away from the risk tolerance, but if you could deep dive into that just a little bit, we'd appreciate it.
Let's go with a French accent.
Sure. So we, as Howard said, we moved out of the Web3 Bitcoin complex because the risks were just not there anymore. What we did to compensate for that was we put some names back it. I think MU and AMAT went back in on the semiconductor, which are doing fine. And also on the option side, on top of covered call, what we did is to do some put spreads for the names we are comfortable. So like weekly put spreads. So you sell closer to the money put, and you buy to protect yourself one more out the money. So you pick up some premium that way, and we do that for the names we are confident. Replace some of the premium.
We should talk about how we think about the miners and the silver, how we position that. That's kind of an interesting thing that we do.
Yeah, I see that you've used some puts with your silver. That would be a great segue into kind of explaining that and the mindset behind some of the option strategies that you all are using. It would be wonderful.
I go. For silver and gold, so the thing with silver and gold is you can't really harvest the volatility premium that you can on equities in general. Those two assets, especially silver, they are all over the place when they move. So you get jump risk when they move. It's 5%, and you don't get any upside because you sold some call, for example. So the best way is to protect yourself on the upside and on the downside by buying calls and puts on top of the ones you sell. So because we are biased on the upside on gold and silver, the goal of the strategy is to at least perform as well as the underlying. So if tomorrow gold moved by 10%, we will not have a covered call. So we will perform at least in line with gold. On the downside, we will lose a bit, but we will be protected. And in the middle, we will get premium. So if silver week to week or bi-weekly from 2 weeks to 2 weeks is around, -2 to +5%, that's where we would outperform the underlying. Does that make sense?
Yes, it makes perfect sense, and I can definitely feel the positive tension between Howard and yourself, meaning Howard being somewhat of a riverboat gambler with his ideas, thought processes, and projections, and willingness to take some risk, where you're definitely looking at the data, the technicals, and ensuring that us as holders are protected, but also getting exposure to minimally the growth upside. Am I kind of capturing that correctly?
Yes, exactly. So gold is exactly. We keep the upside, we mitigate the downside, and we try to pick up premium in the middle.
Howard, did you want to add anything before I get to a next community question?
Yeah, just specifically on the high income strategy, we have both the miners and silver, and the way that Dom and I debated about this is like, for example, like the silver miner is a levered play on silver, so we already have more than one beta exposure to silver, and so we would either write some calls, even though we like silver, to get the premium, but net with that call plus the miners, we actually have one beta. So this goes into sort of the technicality of how we put on the positions, and so I think that is an example of like we're really looking at the details of the underlying asset and how to express that in the portfolio.
Okay, great. I want to make sure we get to a couple others. So there are multiple questions about KBTC. Has it been filed for? Is it something that's on the menu coming up? Can you speak to that at all, KBTC?
Can we talk about the prospectus is actually effective? So yes, so we do have a strategy, a Bitcoin enhanced income strategy. I think the ticker is actually KBIT, and we hope to launch that soon. It will.
It's been filed for, and the prospectus is there. Is there an Edgar report on it?
Yes, it's on Edgar, and it's actually already effective. That's why I can talk about it.
Oh, okay,
it's
wonderful.
Approved. Yeah.
And is there a launch date?
Not yet. We're just trying to get through Friday for the moment.
Yeah, so that's a great segue, because what you've been grinding your fingers to the bone and running on the hamster wheel is your new fund. I know you can't talk much about it, but you're launching it tomorrow. Do you want to say anything about it right now, KCOP?
Yeah, so we haven't listed it. It will be listed on Friday. And just, I saw Income Architect there on that day. We just happened to have I can go deeper into how we're managing the strategy. But maybe just a little bit of a premise of why we think about copper. So again, going back to the theme, so we really start with a secular view, is that people or countries continue to look to be more independent in terms of things that they compete for, and natural resources will be one of them. And so with the whole AI build out and electrification that's happened into in not just the US, but the rest of the world, and also the lack of supply of silver, we think that there's going to be increased demand for copper as an input product. A little bit of, if you think about these three metals in a spectrum, gold, silver, and copper, if you look at one side of the spectrum is reserve currency assets, and then the other side is industrial demand. Gold is obviously on the reserve currency asset. Silver is actually in the middle. It's both viewed as a reserve currency asset, and it has industrial demand for things like silver panel. But copper is purely in the industrial demand side. And so it's in some ways it's a play on or have an exposure to global growth, especially since everybody seems to be building infrastructure, not just in AI, but electrifying. We're moving, although crude is very cheap right now, I think there's still a move to be a bit more energy independent. So we think that that's an asset that people will continue to look at. There isn't an immediate demand and supply imbalance, but in a couple of years, there will be. Copper is actually not easiest right now to mine, so we think that there's going to be a bottleneck there as well.
Okay, we're excited. People have been clamoring for it. I know that you've had your daily battles with the government and getting that done, but we hope that your launch on Friday. I did say tomorrow. I apologize. It is Friday. That it will be amazing. Back to some of the community questions. There are at least 3 or 4 regarding perhaps you launching some basket funds, whether it be in utilities, healthcare, international. Is that on the plate? Is that something that you're looking for as people are wanting to look for, diversification and ways to plug into their portfolios other than high volatility sectors? Is that something that's on the plate and coming in our direction soon?
We have some sector things that we are going to file, hopefully in the next couple of weeks. So stay tuned. But it's going to be aligned with the views that I just described, that if we're going to go into move away from, or at least have some deglobalization in the world, what are people looking for to have that security in it?
Yeah, I mean,
Ambassador.
yes.
Oh, excuse me. Go ahead, please.
No, I was saying based on the dialogue from the community and in questions, I mean, there's definite interest in healthcare, utilities, international funds. So if you are wondering, that those are areas that people have been asking for, and somewhat clamoring for, to make sure that they can participate with KURV, because I think there's a great hunger for your approach of offering good and substantive yield, but also protecting the capital that we've put into your funds. And I think there's a clamor for that. With that, I wanted to give an opportunity just to kind of talk about that. Having this asset class has now been around for about 3 years. It's kind of morphed, changed, kind of like an amoeba, take on different shapes. How are you seeing it play out right now? And do you feel vindicated or vindicated from your opinion, which you had from the outset, which way the kind of asset class is moving right now? Could you speak to that?
Which particular asset class?
The asset class of the higher yield, meaning before this happened about 3 years ago, SVOL at like 16 or 17% was like the pinnacle, unless you were in hedge funds and otherwise. And then we came out with 50, 60, 80, 100%, and it kind of went crazy. And you were talking from the beginning that this was an unsustainable type of situation and that investors are going to not necessarily be happy entirely through the entire process. And that's why you kind of stayed steady and true to your philosophies.
I appreciate that people, I think part of it is also the whole entire community has become more sophisticated in terms of, there's just more choices, right? I guess, I think when this whole industry started, it was really straight cover call things. And I think we started there because some advisors are already using that, and it was easy to understand for those who were new to options. And I would say that, I think at the end of the day, there's always going to be folks who like one versus the other. I think Dom maybe can also talk about it, that, from an institutional standpoint, we want to be here for a while. We want strategies that will be here for a while. So, and we want investors and customers to be with us for a while also. So, if you want to have a long-term business and also to have things that can navigate different environments, you would probably end up with the strategies that we launched. So in some ways, we appreciate people who have been with us since the beginning, and I'm glad that the market is kind of heading towards where we started. And to be very honest, right, what we started with the single name enhanced income strategies, we've now updated because the community wants things that are more sophisticated, and so I think we'll continue to adapt, but I really think that thanks for the community to support us from the beginning, and those who have come on since then. I think we'll continue just to do our best to generate the returns that we can in these strategies.
Thank you so much. Parabolic is part of the interview team here, so she does have a question for you, please.
Thank you, Ambassador, and thank you, Dom and Howard. Given the increase in shortages of silver and the increase in demand, as well as the upcoming patent that Samsung has for the silver battery it will be placing in automotive, what concern or probability is KURV holding for a permanent decoupling of the paper market from actual silver?
I have very strong views about this. Dom, do you want to go first? Then I can go rant later.
Samsung, there was a story. Samsung was looking to buy some mines in Mexico because they were afraid they couldn't get any physical silver. So the paper silver, there is a lot of based on the futures market. Futures markets are based on whatever stock the future exchange has. If the stock decreases, there could be some decoupling, but I think Howard thinks more on the decoupling than me. To be honest, a fund like SLV owns the physical silver anyway, so wouldn't really matter to me.
Okay.
What do you think, Howard?
I'll jump in. And so I think one of the things that really got me going during the weekend when silver sold off like 25% is I was looking through X, which I probably shouldn't, and there were all these people who talk about silver, and most of them were just repeating that silver went down 25%, which is, as an investor, it's not useful to tell me what has happened. It's like what is going to happen, right?
Yes, yes.
So I think I'll talk a little bit about our short-term view, and then I've already expressed our long-term view, which we think that there's going to be price support for silver for the next 3 to 5 years, just because there's just not enough supply to meet the demand. In the short term, we do think there's going to be elevated volatility, and if there were any true distinction that we are going into a deglobalized world and that the U.S. is no longer in the center, silver is actually a really, really good test case, which is that typically in the past, U.S. investors have set prices for asset classes. In this cycle, it is China who is now the marginal buyer that has been setting the price for silver. This is very unusual, right? In a multipolar world, this is what's happening, is that the U.S. is no longer setting asset prices for a particular asset class. Yeah. So we think, and so this is our short-term view, is that Chinese New Year is going to come about in the next week. Because China is the marginal buyer, silver is going to be more volatile in the next few weeks and probably the week after. Nothing happens in China during Lunar New Year celebration. So you're going to see some short-term volatilities, and you saw there were huge shorts on the Shanghai exchange where the notional of the future is more than what all the physical silver that can be delivered in the Shanghai exchange, right? So prices are going to be everywhere, right? But those are kind of times when there could be opportunities to enter, and silver is already back at $85 an ounce, right? So it's already recovered quite a bit. I think the question about paper versus physical is that one thing is that we generally do. So I think one benefit of our strategy is that we use options on SLV or GLD, so which is that we track spot prices instead of future prices. And for those who are familiar with commodities trading, is that generally in a normal market environment, most commodity prices is in contango, which means that future, say, the price of silver in the future is higher than what it is now because you have to factor in delivery, security costs, etc. But as an investment, it's actually terrible because as you roll down the curve, as you get to expiry, you're actually losing money. So that's why if you were very excited about investing in an oil fund when oil was $100 a barrel, etc., you lost money because oil was in constant contango. So getting exposure through commodities through futures is actually not that great. So that's why we opted to do spot, and then there's other reasons, tax reasons, etc. I do think it's a little bit overplayed about whether futures, the scare. So for people who don't have the context, is that there was a little bit of a moment where people were really concerned in the market around Christmas that, hey, there's not enough silver in the vaults. And the notional of futures that's out in the market is many, many times that of silver that's actually available for delivery.
Yes.
So what will happen if everybody choose delivery? So that is, I will say, that's not an impossible scenario. It is a possible scenario, but it is an improbable scenario because most futures, the delivery rate is about less than 2%. So, but let's say all of a sudden people want to do this arbitrage trade that's happening between Shanghai and London or New York, and they want to have higher and higher delivery. There are certain kind of circuit breaks that could happen. Now, true, if 50% of the futures are going to get delivered, there's going to be massive dislocations in the market. There is not enough silver, right, in the market to be delivered. But I think we also need to overlay what actually happened in the futures curve, which is that there was a general rise in futures across the curve, which means that we're actually long. It wasn't just speculators in the short end of the curve that was forcing this price action. It was people. There were people who do want long-term exposures who are also trying to get exposure through long-dated futures. So that, I think, in my mind, means that this secular silver position is many people hold it, and that again will provide price support for the price of silver. I think at the end of the day, we've already seen many exchanges increase margin requirements, and I actually don't know if they're going to roll those back quite as quickly. So we'll actually see the notionals of the future markets probably, for the moment, you will just have to put more money down if you want to buy futures.
I see. Thank you. And we are very much looking forward to your copper product. Thank you for bringing that to the industry.
Appreciate you very much. Howard and Dom, we've been here about an hour. I do have about 4 more questions here. They're not too long. Is that okay if we continue for a little bit longer?
Let's get through them.
Okay, we'll go through rapid fire here. Somebody wants to know about the way that your funds are structured for any type of tax benefits. Could you share that with us, please?
Yes. So for the gold and silver strategy, any non-equity options that we use gets the 1256 treatment. So which means that any gains is actually taxed at 60% long-term capital gains and 40% short-term capital gains.
So that's the 60-40 on that rule, right?
60-40, correct. And that will be true for the copper portion of the copper strategy. Miners is equity, which is also used in the Tech Titan strategies. Those have a different tax advantage, which is that we can generate return of capital. So those we can manage the capital gains such that the distributions are not immediately taxable. And they can, so the goal for return of capital is you hold it long enough so that you do get the preferential 20% long-term capital gains at some point when you sell the security. So that's the...
that just makes me so happy to hear a fund that actually is taking that stance and going in that direction, and all the nonsense about return of capital is they're just letting that kind of stream off and doing what's right for the investors. Okay, next quick question is somebody wants to know if you're going to be at the Bitcoin conference in Vegas this year.
We are not going to be at the Bitcoin conference because I didn't know about the Bitcoin conference this year. So.
All right, well, that answers that question. The next one would be somebody wants to know what strategies you're using to hedge on the downside for your KQQQ product.
Do you want to talk about that?
Yeah, sure. The triple Q. So what we do is, right. So this fund is more biased towards the larger names, and to mitigate this risk, what we've been doing is buying max put. So the ETF max 7, we bought max puts on that to compensate that loss of sensitivity to the market. We bought triple Q calls. So in effect, we are it's a hedge on the max 7 puts, which actually is in the money these days, compensated by a long on triple Q. That allows us to decrease the risk to the max 7 of the portfolio and to reduce the dispersion to triple Q.
Is that because the Mag 7 is such a large component of the Qs then?
Yes. Yeah.
Okay,
yes.
That makes perfect sense. I hope that answered that person's question. The next it's faster than writing than buying puts on all the names.
and also doing it on the fund, on the max fund rather than individual stock is cheaper because the volatility of the max fund is lower than each of the underlying volatility.
Very smart. Love it. The next one was on the funds that you're going to be launching coming up. I know you can't speak a lot of it, but could you say whether or not they're going to be weekly payers like KYLD is, or are they going to go back to the monthly cadence and rhythm?
I think we'll have to divert that to what's in the prospectus.
Okay, as a follow-up question, not to pin you down in that, but will what we see with the copper fund be indicative of what we're going to see going forward, or is it going to be an individual choice on each fund as it launches?
I think our default is monthly, and then we will position that such that there's at least one commodity-centric fund that is distributing every week. So we obviously need 4 for that. We have 3, but that's the idea in a particular asset class.
Okay. Then one last question and then a follow-up to those. And somebody would like to know your views about ETH becoming a main crypto rail for tokenization and smart contracts on chain and for financial vehicles. Do you believe that there's an opportunity for KURV to take advantage of that, or are you not a buyer of that thought process?
No, I'm a huge buyer of that process. In fact, I think one of the benefits of tokenization is that, for our ETFs, we do have many non-US investors who buy our ETFs, but they have to go through, their local brokerages, etc. Hey, if anyone wants to tokenize our ETFs, I am happy to talk to them immediately, because I think that just brings a lot of our what we offer in a different form for people to access. So we're very pro of that.
Sorry, I needed to unmute myself. Thank you very much. All right, so then I have one follow-up or one basic question for each of you, and then we're going to go ahead and wrap it up. Dom, in this Discord and within this community, there are a lot of people who like to do options trading. So it would be remiss of me to have a world-class options guru on this forum and not ask you for a great piece of advice, either that you've been given or that you've given to others that they have said, man, that is the best piece of advice I've gotten with regards to doing options trading, being involved in the options trading field. What can you share with us?
Well, to me, it would be cognizant of the risks you take, especially when selling options and selling calls outright. I mean, that would be because that's just dangerous. So be careful of just protect it. Like sell spreads instead of selling just call or put. That's what I would say.
All right, you heard it here, folks. Spreads, not just single legs. I love it. I wrote it down. Thank you. And then for you, Howard, could you just kind of give us an idea if you were our like uncle, brother, and you were looking at these funds, how you would explain to us where some of your funds, the different ones that you have, because you have a multiplicity on your menu, would work for us as an investor, and maybe even kind of like what quantity of the portfolio would you recommend we look at as we're building one for ourselves?
Yeah. So I used to be an asset allocator for pension funds. So the way I always really is still very good cognizant is that don't put all of your eggs in one basket. Even though I know, I think that where the market is going, a lot of people really want to just go. Was it right to the moon? Which is you're riding to the moon until you're not, which is dangerous. So I think having a diversified basket, knowing how different asset classes are correlated to each other in certain environments is very important. And that's why we have been actually building out our platform so that you can have that diversification. If you are a income investor, you didn't have a lot of choices. For instance, if you wanted gold, it means you had to sacrifice income because gold does not distribute any income. So if you think about it, what we're doing is we started with the risk on assets. So they tend to be equities, growth equities, which are more volatile than, say, value equities. And then those don't pay income. So we try to make income investors' portfolio, that decision, easier. As we build out, we're looking for negatively correlated assets, which was gold as a portfolio hedge. And then, if you want to have some growth exposure in the form of natural resources, income investors really didn't have a choice than to sacrifice income to get commodity exposure. So we're building out that complex. Fixed income itself is already distributing, but generally interest payments are taxed at ordinary income. So we have a few things that we think will be interesting from a fixed income perspective. And then you're right. What you guys are looking for is something that is good to diversify, which is if your equity risk is primarily in the US, especially if dollar assets is not as favored going forward, you should look to diversify into international exposures. So I think just they say diversification is a free lunch. I would qualify a little bit. I like the quote is like, if you have too much diversification, that means you don't have any conviction in your portfolio. But the truth is always in the middle of extremes, right? So you do need some diversification. You do have to have views in your portfolio. But hopefully, as we kind of build out our platform, which we'll file more, is that these different pieces of your portfolio, you have access to the income version of those, so that when you construct the portfolio, you have a diversified portfolio with different assets that all generate tax efficient income.
We are just so grateful that you took your time and treasure to be with us and share with us. And I can't wait for 2026. We're going to get on a cadence and rhythm of these, and we'll welcome you into this Discord and chat on a regular basis. The knowledge that you and Dom spread to us helps us be better investors, make better choices, and take care of our families. We're very grateful. Is there anything that you want to say to wrap up before we go? I'll start with you, Parabolic.
Just so grateful that you were able to spend some time with us today. Dominic, welcome to the show. And Howard, great to speak with you always. I think this was one of my favorite interviews so far. Thank you.
Dom, we're so thankful that you stayed up late to watch us or to join us. I hope that the Olympics over there have been wonderful. Is there anything that you'd like to share with us before we head on out?
No, it's great. It was a pleasure being with you all.
Thank you so much. Howard, anything you want to share with the community, a little tidbit that I may not have asked you about or something that you want to ensure that everybody knows?
No, keep the questions coming. We see them, but we can't always answer them directly. But if we build up a bank, let's do this. We're always happy to answer any questions on what we're doing.
Wonderful.
Our views.
And there is a KURV thread in the Discord here. So if you ever have time and you're feeling completely bored and have nothing else to do, pop on in there. People would probably love to either hear your thoughts or have you review their questions. Again, we're very grateful. I want to thank everybody who is here, who participated today. I'm sorry that we didn't get everybody up on the stage. We'll try to rectify that going forward, but I am grateful for your participation. Just a little plug, tomorrow at 11 Eastern Standard Time, we're going to have David Kaczynski with Quantified Funds on. So we'll take a second run at this for this week. Appreciate the grace that you all have shown me as we kind of figure this out, and we'll get better with it. I do promise you. Again, Howard, thank you. Dom, thank you. Parabolic, you are the best. We appreciate it. So for everybody, have a great evening. Be blessed and be super, super successful. We'll talk to you later. Bye-bye.